Hey there, everyone. Today, I want to do a video about kind of how we've seen this financial system in our lifetime just go from, something that was, halfway decent, halfway tolerable, basically to something that's about ready to go over the cliff. And basically, this is all life after the gold standard. In our lifetime, we've become used to the system that's in place because we've never known anything else. So inflation is just part of normal life. High prices, all of these things are just part of normal life because during our lifetimes, this is the monetary system that we've been on. And give or take, a few years here and there, most of us between, 40, 50, 60 years old have lived through life after the gold standard. So we just assume that this is the way everything has to work with the inflation, with the people at the top basically making all the money, and then us down here just getting, the breadcrumbs and stuff like that. I found this cool article called WTF Happened in 1971 that really has a bunch of alarming charts on it that I wanted to go through to kind of illustrate the point that this isn't just a nostalgia type thing like the good old days, but there is actual, a bunch of charts that show how society has changed, how everything is just everything is going over the cliff. We talked about this article over on the Survival Preppers YouTube channel with Brian a little bit earlier in the week, but I wanted to go into a little bit more depth and talk about a few other of these charts. Also, I wanted to go into a little bit about the Federal Reserve and why it was that they decided to abandon the Federal Reserve. And then in 1971, Nixon just completely abandoned it. And we have kind of seen this climb up this roller coaster hill we've seen over the last 5 decades. And to me, it seems like we're just getting ready to go over the top. So put on your seatbelts, basically. You hear people, the Davos elites, you hear the World Economic Forum, you hear these global, quote unquote, leaders talking about a new global economic system. And I think this is kind of what they're talking about. You think back to the Federal Reserve, how it was created, and that was basically that meeting at Jekyll Island, 1910. A bunch of guys got together and decided that because the economy was so volatile and a bunch of different factors as well, they needed to create basically the Federal Reserve and create a system that was going to kind of even everything out. Now, the interesting part, and it's a very good book, too. I've got it right back there if you want to really get into detail about that stuff. But it's really interesting that they do these things. It benefits mainly the people at the top. It doesn't. We are kind of an afterthought. Us, the normal everyday people. We're kind of an afterthought with this. We are just the cogs in the machine or the parts of the car that make the car run. We're the wheels, we're the lug nuts, we're the spark plugs, we're the fuses, the wiring, and all of that. We are the stuff that the driver of the car doesn't pay attention to until they have to. So when these systems get put in place, it's probably for the quote unquote greater good, but it is something that I question how necessary all of this was. So before I get into some of these charts, I want to talk about what kind of led up to the gold standard, and I'll make this pretty brief. I don't want to go into a whole lot of detail with this. As preppers, we probably understand quite a bit anyway, but again, that's a pretty good book back there. So this article talks about, let me put it on here. This article talks about the initial reasons that we went off of the gold standard. And I will leave the links to all this stuff that I'm mentioning in the show notes below too. But this right here says that why did we abandon the gold standard? To help combat the Great Depression faced with mounting unemployment and spiraling deflation in the early 30s, the U.S. government found it could do little to stimulate the economy. To deter people from cashing in deposits and depleting the gold supply, the U.S. and other governments had to keep interest rates high, but it made it too expensive for people and businesses to borrow. So in 1933, Roosevelt cut the dollar's ties to gold, allowing government to pump money into the economy and lower interest rates. So what and this is something that did actually help get out of the Great Depression. So a lot of people argue that this was absolutely necessary. My thoughts on this are, we don't know what would have happened if they didn't. So yes, it may have taken longer, but they do these types of things with the monetary system with short-term goals in mind. And short-term goals, I mean decades and stuff like that. They probably didn't care what they did back then, the ramifications, and the way we're seeing things happen right now. Because when you basically take off the restraints, all these crooked politicians, crooked businessmen, all these people are going to abuse the system, and that's exactly what they've done. So in the 30s, Roosevelt did this, but it wasn't a full-scale abandoning the gold standard. It basically just cut some ties, and everything kind of went on, fairly status quo. The people actually benefited because he needed to help the economy. But in 1971, and this is where this all gets sort of interesting, in 1971, Nixon basically completely severed ties with the gold standard. And the reason for this, I'll scroll down and read this a couple paragraphs here. So this right here says, in the 1960s, European and Japanese exports became more competitive with U.S. exports. The U.S. share of world output decreased, and so did the need for dollars, making converting those dollars to gold more desirable. And this is other countries that had dollars. They could trade those dollars into the United States for gold. The deteriorating U.S. balance of payments combined with military spending, foreign aid, resulted in a large supply of dollars around the world. Meanwhile, the gold supply had increased only marginally. So this is basically the same thing we're seeing these days. Print a little bit more money and everything gets better. Kind of like robbing the future to pay for the now. So even back then, they were spending recklessly, just not to the extent that they are now. And I think as I go through some of these charts, you'll see that it, for one reason or another, and maybe it wasn't 100% the gold standard for all of these, but that was the catalyst. That was the point in this timeline where everything just started to take off, where all the money started to flow towards the top, and us down here, everything just kind of leveled out or declined. It's also the time when society, you look at how society was before the 70s and how it is now. Back when you could teach gun classes in school, shooting classes, back when there was wood shop, and back when, your kids could be out after dark and you didn't have to worry about them. So along with all of these financial things as well, you think about how society is decayed because of this. And is that, something to do with monetary stuff? I think it probably is that quest for, to be the richest person around, or that having to work two jobs and being stressed because you don't have enough money, and all the different factors that play into, and not being able to pay attention to your children, all of those different factors that play into the big picture. So let me go through a few of these charts here, which I think are pretty interesting on this. The first one here is just the productivity, and I think this is something that's inevitable as more innovation and all these things happen. More productivity is just inevitable in life. Companies are going to be able to make bigger, faster, stronger, better things quicker. They're going to be able to make a lot more of them. But the compensation, I think, on this chart is interesting because all of this, and you'll see this on a lot of these charts, all of this stuff, the inclines are pretty relative, meaning the productivity and the compensation were about the same, meaning everything was pretty even until 1970 and 1971, and then everything started to separate a little bit. This one right here is an interesting one. Income gains widely shared in early post-war decades, but not since then. So you see this incline where the top 95th percentile is kind of aligned with the 20th percentile and the median. And then in 1971, you see things sort of break off, and maybe it took a few years, but you start to see how this money is sort of trickling more to the top and less to the people down below. This one is also interesting as well. The top 1% earners and the bottom 90% earners. So you look at the 1920s through the 1950s, and this is probably a little bit to do with Roosevelt going away from the gold standard. So you've got the Depression, and then right here you see all of this growth because of what he did. So like I said, it probably benefited getting away from the gold standard, but at what cost? And then you see in 1971, the top 1% earners all of a sudden start to go way up. And then we, again, it's just a stagnant, manipulated, that's the feeling I get from all this stuff, is just the manipulation of it. I'm probably going to use that word quite a few times in this video. Now, this one is interesting as well, and I think this is a byproduct of all the money going to the top. See if I can get this on the screen here. All the money going to the top, and meaning that, and the average citizen kind of just remaining stagnant, meaning that the prices were going up, this inflation started to happen, and our wages and everything was basically flatlining here for us normal, regular, everyday citizens. So you see back in, what year is this? 1965, 1970. It was about kind of 50-50 with women working and men working. I have a feeling back then 47% of the spouses working, or 2% of the wife only working, was probably because women were joining the workforce. They wanted to get out there. They wanted to do this stuff. They wanted to make their own money and all that. These days, when you look at this, it's more of a, you see this rose from 47% to 66%, so 20% more. And husbands only working fell to 20%, and wives only working went to 7%. These days, I think you're seeing that because you have to. And this goes to, the decay of society that we're seeing as well, with parents not paying attention to the kids. They don't have time to. In order to pay for your house, in order to pay your bills, it takes two people working these days. Where back before 1971, it was more of a choice, I suppose. And this is a generally speaking type thing, not a, for everyone. I'm sure there were a lot of people back then that needed those two incomes as well. But these days, it's just almost a necessity. Okay, this chart is to me is pretty interesting because it really shows, some of the things on this chart, it's the normal inflation that we all expect, right? Even though that is something that doesn't necessarily have to be that way, but because since we went off the gold standard, and since you've got the Federal Reserve and these central banks all controlling everything, and they can basically spend whatever they want, we are used to the inflation and stuff these days. A couple of things that pop out to me on this is a new home in 1971 was $25,000. The average income was $10,000. So the average income these days is about $61,000. So about 6 times as much as it was in 1951 or 1971. So if you take a new home times 6, you got $150,000. A new home these days, I believe the average, Brian said on the show the other day, I believe the average is about $400,000. That's a little bit more than 6 times that rate. So you've seen the housing market go way up, and the income, your average income has gone up as well because of this made up inflation, this made up monetary system, but not near as much as, the housing market. New car back then cost $3,500. Rent back then was $150. If you take that again times 6, you're looking at $900 a month. I don't know that you can get a house in most states these days, even just a studio apartment or a 1-bedroom apartment for $900 a month. The most interesting one, I think, on this is the tuition at Harvard University back then was $2,600 per year. And that was just straight tuition, not housing or anything like that. These days, I believe it's about $60,000. to get into Harvard just for 1 year. So that I'm not real good at math and all that, but I guarantee you that's a little bit more than 6 times the rate. And that is directly due to government intervention in government making the college student loan process a whole lot better. Gasoline, 40% or 40 cents a gallon back then, which is, I believe that'd be like $2.40 these days, which isn't far off in normal times. It wasn't a couple years ago anyway. But these days we're looking at $4 a gallon. So some of the food, basically, again, we're used to this inflation. So all of this stuff is basically, it's relative, and it's just something that we expect. But these prices don't have to go up. But with the current economic system we're in, they do have to go up. But it's just interesting to see some of this stuff, how out of whack it is, and how much profit basically is going to the top, and then us down here, the little guy, kind of losing out on the whole process, I think. This is an interesting chart right here, because this is what I have been talking about with inflation. And this is just a can of Campbell's soup. They use this as an example, kind of like Big Mac economics these days. But you look at the inflation, and it was pretty flatlined from 1895 all the way up till about 1971, 1975. And then all of a sudden, this inflation starts to kick off. So this is what I was talking about with us in our lifetimes. We're just used to this because we've seen it our entire lifetimes. It's just on a yearly basis, we're just used to prices going up. Every once in a while, it'll dip, and we'll be like, hey, this is fantastic. But nope, then it goes all the way back up again. So I think it's pretty interesting that because of the current, the dudes at Jekyll Island and the Federal Reserve and the manipulation and all of these things that are happening, we are just expected to just be comfortable with the fact that the prices are going to go up. That's just the way it goes. My thought is, at what point, how far does this scale go up before we end up just going off a cliff, or the powers that be decide that we need some sort of new monetary system, because this one, they've milked this one for all they can. Again, this is another one that shows that everything's sort of flatlining here, and then climbing up the mountain to jump off the cliff. Cumulative inflation, 1913 through 2015. Again, consumer price index. You see the wars, a few peaks during the wars, but in 1971, for no other reason than the only similar factor in all of this is that we completely severed our ties from the gold standard, and everything just completely skyrockets from there. All right, so I want to find this one right here. This one is the U.S. official gold reserves and gold price from 1900 to 2008. And I think this is pretty interesting, because you look at the whole green area right here is the reserves. And the gold price was pretty steady all the way up until the early 70s. And then 1971 right there, you see our gold stock starting to dwindle, which probably had a lot to do with Nixon deciding that, we needed to completely sever ties from the gold standard. We couldn't allow other companies to exchange dollars for gold, or maybe that's another reason why this started to dwindle, because so many other countries were doing that. So because it's in typical government fashion, because they created a problem, they need to create a solution for that problem. And that solution was to completely go off the gold standard. And since then, you see the gold reserves basically flatline right here, which makes me believe, again, with the manipulation part of it, how much of that is actually there, and how much of that is just those digital ones and zeros. But you see the gold price, this is why I think everything is so manipulated right now. You see the gold price, all of a sudden it starts to jump, and then it goes down a little bit, but now it is just completely skyrocketed. So I think that, and again, there's probably a million other factors to be taken into account with this, but the correlation is there, and you see it with all of these charts, how all of this stuff happened. So like this website says, WTF happened in 1971. And that is the main thing that happened that year, was going completely away from the gold standard and embracing this fiat currency. And then you've got the S&P, you've got the stock market, you've got these traders doing all these things, and they don't. It's almost like imaginary money. I mean, they're making money speculating and doing things, rather than, a lot of the money used to be made in, factories, in product, and all of that stuff. And these days, it's just kind of funny money is what it is. One last thing I wanted to go over right here, and this kind of goes to the decay. I'll go through that in a second. I forgot about this one right here. This is the federal debt to GDP. And you see, you have a couple peaks, and it's usually wartime, right? When the debt starts to rise, World War II specifically. And then everything started to decline after that. Everything was starting to get back to normal. And then in 1972, once we went off that gold standard, you've seen a little dip here, but you have seen everything just skyrocket since then. Now, this is a projection in 2050. This is what the debt's going to be. So debt to GDP ratio. And there's, other than the military industrial complex, there are no World War II, Great Depression, World War I, Civil War type events. So what is it that is kind of inflating those numbers so much? And I think that's a lot of the overseas spending. That's a lot of the military. And it's the main thing, I think, is the military industrial complex. This one is interesting too, and this is going to be a hard one to get on the screen here, but this is the U.S. national debt. And I'll have to scroll way down here to get to, 1971. But you see in the 1900s, everything was basically right. The budgets were balanced and all of that. And then in 1930, when Roosevelt decided to sever ties a little bit with the Federal Reserve or with the gold standard, you see it start to rise a little bit. And then in the 40s, goes up a little bit more, but it still maintains, for the most part, that level until 1971. And then it just completely, over the next few decades, and this is basically our lifetime, it completely skyrockets to 1920. So this is 20 years of data that's not even on this little chart right here. But it just shows how much it is actually skyrocketed through all of this. And it's just, again, I know I've said it a few times, but it is stuff that we've just become complacent to, stuff that we just have become used to. This is just the way it works. But as you see back here in the 1900s and even up to the 1960s and 70s, it doesn't have to be that way. We've chosen, because our politicians and these people make us think that and partly it is partly true. It does create a less volatile market, but at what cost? And that's that's my concern with all this. When we see this stuff fall off, how bad is that going to get? This right here, I think, is a big reason why Nixon decided to get off the gold standard. You've got the U.S. monetary gold, and this is basically kind of the same as that other chart where it showed the gold, our gold stash, our gold supply starting to go down, and our external dollar liabilities, basically printing money, starting to go way up. So at that point, Nixon probably, and the politicians probably not liking the fact that they were getting the raw end of the deal all the time, decided to change the rules. This one right here, the federal deficit to surplus versus GDP, interesting as well. You've got these wartime events where it dips, which is understandable. But in 1971, everything starts to go off a cliff. And this is data from 20 years ago as well. So the one I wanted to mention, and it goes into the decay of our society, is, if I can find it here, it's down here a bit, is this chart right here where it talks about the number of mass school shootings and deaths from 1940 to early 2018. And this, I think there's a bigger picture to be seen with this, and this is how our society has just kind of fallen apart for one reason or another, whether that's the gold standard, whether it's the financial system, whether it's the stresses of everyday life because of this, if it's the competitiveness of, the importance of becoming rich or making a dollar as compared to, material things and stuff like that. But you see how this just basically, it was back in the 60s and 70s, and everything was just sort of the life that we all kind of think about, that when we were teenagers, it's that kind of life that we lived back then. It was safe to go out after dark. For the most part, it was safe to do all these things. But ever since then, the 80s, the 90s, it has just kind of gone through the roof, and our society is completely different than it used to be. This is interesting too. The share of young adults living with parents rises to levels not seen since the Great Depression, and I think that is all has to do financially with all the financial stuff as well. So I think it's just a lot of interesting stuff. And like I said, I'll leave the links below these and you can look at all these charts. But it's pretty undeniable that since we went off the gold standard, everything has just, we've been going up this roller coaster, the first hill of a roller coaster, and it sure seems like we're about to go down. Now, with all these big wigs talking about changing the monetary system and doing all of these different things, what does that mean for the little guy down here, us? We are basically along for the ride, and they're the ones that get to pull the levers, and they're the ones with the steering wheel in their hand. And like I mentioned earlier, the analogy I used earlier with we're all parts of the car, and they're the ones controlling it. What does that look like? What does that change look like? And what are the growing pains in between those? Or how far do they let it crash before they have to do all of that stuff? Those are the things that concern me these days, because I don't think... It very well could be something that, this goes on for another 50 years until it just gets too bad. And again, it's just just like they like to do, lay all the debt, lay all this stuff at the feet of our kids. But it is also something that could happen in the next decade or two that we are going to have to suffer through with all of this. So paying attention to all this stuff, getting our preps in line and doing all the things that we can do, I think is more important than ever these days, not just because of the inflation that we're seeing right now, not just because of the shortages and the geopolitical conflicts going on in Ukraine and everywhere else, and some of the civil unrest and riots you're starting to see because of the food shortages. But it just seems to me, you look at these charts and how everything just continues to go up this hill. It looks to me things are, it's getting to that boiling point. To where something has got to give. And who knows when, why, and how that all happens, but it does seem like something that I've got more urgency for than I ever have since I've been doing this whole prepping thing. So at any rate, if you've got any comments, any thoughts or anything on this, I know I'm no economist, and I'm sure there's ins and outs with this stuff that I don't understand or people disagree with. Even economists don't agree with each other. So, but I think these charts and these stats kind of paint a pretty clear picture about how things have just gone off the rails in our lifetimes. So, again, if you have any comments or questions or anything like that, leave them in the comment section below. But we will talk to you later. Take care and prepare.